toe in the water. It's obviously not working, so you got to pull back. I do believe that that this is not the right time in terms of our previous guest was saying, listen, nobody is in strong enough shape other than the Chinese to take this, and the Chinese will now have to, they don't even know, the government doesn't have to worry about slowing itself, its own country down, the rest of the world will slow it down. So it's just not a great level, it's not an interesting level to pick, it's just not a good level to get involved.
Here's my other question, you know, and it comes back to the point Steve raised, and everyone was starting to weigh in on, which is either is the market not paid attention, or are they disregarding out of a lack of credibility at the European Central Bank the comments that Trichet made,
I think
which
it's the latter.
So you think it? So now that almost is more serious. If you don't have confidence or credibility for the European Central Bank, that is a much bigger problem.
We need a default. I mean, everybody knows that. The banks, you know, everybody's going to, all the money, the trillions of dollars of hot money is going to keep pressing until they get a default. Once we get a default, then the euro will stabilize and it'll be interesting again. When I say interesting, meaning that when you buy a stock, you won't get the report and discover you're down $2 from where you bought it, which is what's happening right now.
Rick Santelli?
Yeah, the euro versus the dollar just cracked under 126. I'm sure we're hitting sell stops. We're hitting knockouts in the over-the-counter market. They're all, of course, watching the euro versus the yen as well. Same picture from a slightly different perspective. And, of course, you can see as the euro and the equities, they are ping-ponging back off each other. And Jim Cramer is spot on. If you are a retail investor, don't touch the TV, but also don't touch your telephone and call your broker. And not a good thing to do.
Well, thank you, Rick. Rick
but look at where we are. See, this is my question.
But an interesting level. It's not a level.
But you're down. We have not seen a day like this, and I don't have the exact date. But clearly, what you're seeing now is since what, last March when we hit the market lows, or the fall of 2008. You're down 560 points. People are seeing this, and those memories of fear are coming back, and that's what can become self-fulfilling.
I think that's true. Look, I'm sure, I mean, I was looking at some, I know this sounds boring, but some master limited partnerships that are selling.
Tim, I'm sorry to interrupt.
7, 8.
Matt Nesto has some breaking news. Matt?
We have so many statistics here as this market unravels. Peter Schachtau sitting next to me just pointed out that the benchmarks have all lost their gains on a year-to-date basis. This 500-plus point loss that we've seen for the Dow is the biggest one-day loss that we've seen since December 1st of 2008. These statistics, as the market weakens up even more, will probably become outdated. We'll have to refresh them. Right before my eyes, Aaron, I mentioned earlier that the 50-day average got taken out yesterday in the S&P. We just took out the 100. We have just taken out the 200-day moving average in the S&P 500, which is a very, very substantial and significant breakdown of technical support.
Okay, where are we? We're going to get Watson up.
It's a fast market.
It's a very fast market. That's very clear. I want to know, where do we start hitting curve? I mean, you're now dropping 300 or 400 points here in the past few minutes.
Well, I mean, like when I came down, it was not an interesting level. Suddenly it's down 300 more from when I sat down here. It's getting a little more interesting.
The last time the market was down 750 points.
That would have been fall of 2008.
You know, obviously.
Aaron, if I can just say something here, Aaron.
I'm not,
we've also just looked on the website of the New York Stock Exchange. Circuit breakers don't kick in after 2:30. Just to FYI, I throw that out there.
That is a fair point. Scott, you're there. What is the talk? What happens from here? And what are people saying? Now you're down 800.
Yeah, I just went through the December.
Yeah, Aaron, and they're saying, when I asked them what the heck is going on down here, I don't know. There is fear. This is capitulation, really. I mean, it is classic capitulation. There is fear in this market. You can take a look at what has happened with the VIX absolutely exploding today. You have seen a flight to safety within gold, a flight to quality within Treasury, a flight out of equities from almost every single major sector. We have seen it accelerate throughout the day, and that's why right now we're sitting down 875 points, Aaron.
We've now broken Dow 10,000. As you can, we're down nearly 900.
I mean, you know, it was 400 points ago. I was 500 points ago when I sat down. It wasn't of interest. Kind of interest here.
Kind of a little bit. Michelle, there was a moment today. Mohammed Al-Arian was on Power Lunch today, and here's the one thing that he said that kind of got us all very uneasy, is when he said, we've been talking to banks in Europe, and now, remember back during Lehman when people didn't want to lend to each other because of Lehman? Now that's what's happening to European banks. So overnight rates are starting to climb. They're starting to get nervous. And you're seeing fragility in the credit system there, and there's concern that we get fragility in the credit system here. We're not in the same position. We got a lot more capital in the banks than we did before.
But we're also much higher. I mean, if a Lehman, I don't want to mention any particular European banks, but when Lehman collapsed, it wasn't a buying opportunity until the next day. You know, I mean,
Okay.
you can't really just go in.
We are going to pull up a chart as soon as we can. Here's a chart I want to pull up because what we're seeing right now, I mean, I believe maybe unprecedented. You're down. Talk about capitulation. Let's take a look at P&G. All right, this is going to say everything. P&G is now down 25%.
Oh, well, that's true. If that stock is there, you just go and buy it. It can't be there. That is not a real price.
That stock was down 2%.
Oh, well, just go buy Procter.
All right, this is an unprecedented
Just go buy Procter & Gamble. They reported a decent quarter.
Is there a hedge fund that is liquidating? Is there a distressed seller?
Anything else that's happened?
A 49.25 bid for 50,000 Procter if I were at my hedge fund. I mean, this is a good opportunity.
They were just taking that point. I mean, that's an incredible. I mean, that name.
When I
Nothing
walked
has
out, it
changed
was
for
at
Procter &
61.
Gamble in the past 4 minutes.
When
Nothing.
I walked out, it was at 61. I'm not that interested in it. It's at 47. Well, that's a different security entirely. So what you have to do, though, you have to use limit orders because Procter just jumped 7 points. I said I liked it at 49. So, I mean, you know, you got to be careful. This when Rick Santelli was saying, look, you know, this is a dangerous market. What I am saying is you put in a 49 bid for 200 shares of Procter. If you get hit, fine. This is very much 1987 like, a little different from 2007 like. So in 1987 there was a breakdown where Procter goes from say 50 to 12.
Yep.
All right. And, you know, you want to be there at 13. I mean, you know,
Wait, look
okay,
at
now
it.
Procter just jumped.
Look at it. Just
It's a fast market.
Yes.
It's a fast
market. The market was down 900 points.
Hey,
we're now down 688.
So remember, I buy 50,049. I now flip it at 59. I just paid 500 G's. I mean, you got to be very careful here.
Somebody just made.
The guy watched the show. He bid 50. He bid for 50. So again, use limit orders. And, you know, pick among stocks. And we just jumped 300 points, so that kind of golden opportunity left.
Because when we saw the Procter and you said buy it, and somebody did. And by the way, let's find out who that was, because that's going to be one darn incredible story.
That guy owes me a lot. I
Scott
like dinner
Wapner.
tonight at Roots.
Scott, what other names, what are they saying at the P&G Post?
No, I just grabbed Peter Costa down here because, again, as you're walking around here trying to figure out how the market in such a short period of time took such a big leg down, Peter, that had all the makings of the capitulation that we talk about that we were perhaps looking for in this kind of a downward move.
Well, you know what it is? It's a capitulation with no bid side. I mean, there's nothing. You have a void in stocks points down. So that's why the market traded the way it was. All the buyers that were in the market earlier today, gone. Anybody who had any interest in buying anything, gone. Everybody's now on the sell side, selling it out. No bid side. And the next thing you know, we're down 500. You know, we went down almost 600 points.
No, we were down 900 points plus in total. We dipped below 10,000 again.
Right.
I might add. We had a very nice bounce off of the worst levels. Does that tell you anything?
That just tells me that now there's bargain hunters. You know, everyone's still saying, you know what, let's see if we can make some money here. Or there might have been guys shorting it on the way down. It's, you know, who knows? The one thing we can say, though, is we have a very large volume, which in any kind of market move is a sign of a major move. We're at 1.6 billion or 1.5 billion here, and it's only 3 o'clock. I mean, that's a lot.
Okay.
So we have some serious volume.
You're going to be a busy man at the close. I'll let you go. Guys, I'll send it back to you. And take a look, by the way, at the total volume, and certainly the down volume versus the up volume. It tells quite a story about what's happening down here. Aaron?
Okay, now I got it. Let's pull P&G back up. All right, it was down, what, 3%. Then 4 minutes later, it was down 24%. Then we made that comment of that is absurd. What is? I mean,
the machine's obviously broke. The system broke down. I mean,
but now
we'll have a big investigation.
But now it may possibly go. But there should be an investigation because
there should be. That's why I say this is like there was a 1984 episode like this, a 1985 episode where the machines broke. You got your opportunity. That Monday the machines broke in '87. It's too bad. The system obviously broke down when it went down 400. We're going to find out that there was a glitch in the tape. The machines failed. We should talk to Duncan Niederauer. Find out what happened.
Let me just say though, I took P&G as an example. Yeah, I mean, I'm not trying to say that was the only one that happened with.
Right. But, you know, now we'll have a big investigation, the special system, whatever. I mean, here's what I'm saying, is that you go and you no, come on. It obviously broke down.
It obviously broke down.
No, the market didn't work. It broke down. The machines broke down. That's what happens. You know, Procter was never at 47.
Maybe the specialist never stepped in as the buyer of last resort like they're supposed to?
Procter was never at 47. Or if it was at 47, it was for a blink of the eye and one of these fast pool traders got it. I would urge people at home, as we go down again, obviously that down 1,000 level was kind of a moment of great opportunity. But look for stocks that were yielding 2% that are now yielding 5-6% in an hour.